Hey guys, Brad Flynn, and today we're going to do a cash flow forecast example. So if you've been thinking to yourself or your accountant says you really need to get a cash flow forecast happening, here's how we're going to do it. So first of all, the thing we need to do to begin with is go to your accounting software and run a report for something called your cash statement. If you've seen some of my videos, you'll know what this is about. And you want to do it for ideally the last 12 months, and you want it to do it for month by month. So that is going to show us what our cash flow was for the previous 12 months so that we can have a guess at what it is going forwards. Now remember, our cash flow forecast is like a crystal ball. It's our best guess to give us some sleep at night, so to make sure that we can get this right. So I'm going to do a sample here. We've got our numbers, and I'm going to plug in some numbers to help you see what it's like, and we're going to go from there. So let's think that for the next 3 months, what our cash flow in is going to be like. You know, we're going to get sales and we're going to invoice them. Invoices are different. When is the cash going to hit our bank account? Now, if we've looked at our past, we might have a bit of an idea. So I'm going to throw some numbers in and I'll walk you through it. So let's imagine it's November now. As I make this video for the next 3 months, I think I'm going to have $10,000 worth of money come into my business. You know, invoices are going out. I think this is what's going to happen. Okay. Then December, you know what? December gets really quiet with Christmas and the rest of it. I think I'm probably only going to have $5,000 worth of cash come into my business because sales will be down, it'll be quiet and so forth. And then January, I'm thinking, yeah, it's probably going to start to ramp up as people come back online, but it's not going to be at my November level. So that's how I think money is going to come into my bathtub or my bank balance over the next 3 months. Fantastic. Now, what have we got to pay out? What's the money that is going to have to flow out somewhere? So let's say we've got wages, all right? So let's say in this business, my wages for the November month, looking at my other months, I'm guessing they're going to be around, this is just a guess, $3,000. Now, I've got materials in here, so I'm assuming we're selling some kind of thing in this business. So usually my GP runs at about 90%. You haven't watched that video, go and take a look at it now on how to read your profit and loss statement. But let's say that my materials cost is going to be about $2,000, okay? And then down here I've got tax. I've put an allowance in here because this is the one thing that trips up most business owners is they don't put something aside for tax. So let's say in this instance, tax, we're going to put aside $1,000 for tax. Now, as we extend out across our next month, let's have our best guess. Christmas, wages are still probably going to be the same unless we put someone off. I don't know. Maybe some people are only on a casual basis. So let's just say that our wages for Christmas is going to be $2,000. Our materials, because our sales are down, you know, we're 2,000 out of 10,000. That means our cost of goods is about 20%. So here, we're probably only going to have around $1,000 worth of materials we've got to buy. And then we're going to add in tax. It's always, if we can, have enough extra for tax. At least the tax money, you put it aside, you can still keep it, yeah? January comes back. Wages, we're back up to near normal. So let's say I'm going to allow $2,500. And in this area here, you might have put everything you're spending money on. You know, you're going to have insurances if they're due, and some months they aren't due. You might have other taxes, land taxes or whatever. You want to put those in as well for the rest of the year. GP, as I said, is running around 80%. So 20% of 0.2, let's say 1,700. As an estimate, these are just my best guesses, remember. And our wages our tax, we're just going to keep and allow another $1,000 for tax. Now, if we add all of these up, we've got our net result down the bottom. So money in, money out. The net result is like the level of our bathtub. So in this instance, we've had 10,000 come in. We've had 3 plus 2 is 5 plus 1 is, and I'm going to change color, 6. So we've had 6 go out. So 10 minus 6 gives us $4,000 in that month as our best guess. What about this one? We had 5 come in, we've had 2 go out. 2 plus 1 is 4. So 5,000 minus 4,000 gives us 1,000. And then over here in January, we've got 2.5. I made the maths hard for myself. Plus 17, 35, 42, plus 1, 52. Is that right? I think that's correct. 5,200. 7,000 minus 5,200 is, where's our mathematicians? $1,800. Now these are all pluses, so we've had more money stay than go out. But how do we tie that to our bank balance? This is where it gets a little bit tricky. Let's say in our bank account, this last month, we finished up, we had $10,000 sitting in the bank account that we started the month with. Now, we're guessing in November, 10 in, 6 out, 4 left over. So we're going to add our starting balance with our extra surplus. So in this instance, 10 plus 4 would be 14,000. Now you'll see that's going to carry through to the next month. We finished November, our best guess, with 14,000. As we hit December, we're going to have an extra $1,000. So 14 plus 1, 15,000. And then the last one, 15,000 plus that surplus or net result there would be 16,800. Now, that's a positive example. What happens if we get a negative? You know, what happens if as an example, our sales for December drop? And we're looking ahead. This is just the future. So instead of it being 4,000 or 5,000, it's only 3,000. Now what happens? So now we have 3,000 in, we still have 4,000 go out. So as a result, we're actually minus 1,000. So in this instance here, it would be 14,000, and we've had money go out. So we're going to be 14,000 minus 1,000. So now we're only going to have 13,000. And now as we go up, because we're $1,000 less here, and our best guess is this will be 15,800. So your cash flow, you want to be looking at it probably every week as a minimum. If your cash is really tight, you probably want this to be really week by week so you can watch it. So hopefully that started to make some sense for you on how to do your own cash flow forecast. Xero and those sorts of software systems are now starting to have this facility built into it to make it a hell of a lot easier. Anyway, subscribe down below. There's some free stuff you can get. You can probably buy one of the templates there if you need one from me. But other than that, have a fantastic day.